Stock market investors are expecting for today that the Weimar-style hyperinflation increases the stock prices to unprecedented heights in what some may call a crack-up boom. We're still not there yet in terms of money creation. However, these levels of fiat printing are expected to happen until next year. Even though it's unlikely that this boom in stocks will happen again anytime soon in the future, it did happen over the last few years, and maybe now it'll start to face its limitations. Over the last couple of months, the US dollar has entered a colossal liquidity crisis, and regardless of all expectations, the Fed's efforts to compensate with stimulus actions did very little to actually boost the market back to its golden days. In Weimar's Germany, stocks hit a remarkable rally until everything crashed in 1942 and then again in 1927. The idea of an endless fiat-driven bull market is a gross lie backed by bankers and their suspicious supporters. Now, here is a quick important message. You may have heard that YouTube revenues have dropped about 50% during these hard and turbulent months. Now, we would ask your help in these hard times. Here at Economist, we are paying for script writing, voiceover, video editing, video footage, and thumbnails. They cost thousands of dollars each month. With your help, however, we can continue to publish fresh economic collapse news daily. Don't think, well, why should I help? Others will solve this. Look, if everyone thinks this, nothing will happen, will it? Don't believe that your $1 will not help. It will. If everyone helps, it'll work. So look, please click the link below, pick up your card, sign up for Patreon to support Epic Economist. It's only $1 a month. That's all. One little dollar for a full month. It only takes a minute for you to sign up, but it helps to keep alive this great community through these extremely difficult times and beyond. We thank you very much. The website is www.patreon.com/Epic Economist. Thank you. As we all well know by now, by the time the Fed finally took action to intervene and stop the crash, it was already too late. It isn't in the Fed's interest to really cease this crash, is actually exactly what they're going for. They designed all the necessary conditions to create this bubble, and their goal now is to make it seem that they'd done all they could to save the economy while they're still plotting the final stroke on the bubble collapse, to hit the US dollar and its status as a global reserve currency. The outburst we're living in is not the only problem markets are facing right now. The real deal is that the main support pillars for equities, which you can read as corporate stocks buybacks, had simply vanished. It is thought that the new bailouts will actually develop a ban for this practice in the future, leading market values to drop unless central banks intervene directly by buying stocks. But the active values will still drop eventually. By then, it'll probably be at a slower pace. It's important to remember the trillions of dollars in loans that had been feeding corporate share prices through buybacks during the past few years were turned to dust because of the downturn. Companies have been using the central bank's repurchase agreements to stimulate stocks at all costs. Over the last 3 years, the valuations had been outrageous if we compare with the absurdly high earnings of these same companies. To summarize, the cash was literally wasted, and the company's debt climbed up to their heads. With that said, we can already figure out that soon this certainty will no longer be a concerning topic for them. CEOs know that even though their companies may stumble during this health and economic crisis, they will still be well assisted as individuals. Bankers, CEOs, and government leaders can count on full certainty that they're not going to be held accountable for the financial catastrophe that they had created, and that is now coming for us. Same as in 2008, they're going to get out from this situation completely untouched, and their actions are going to be forgotten. It seems that the only way to get them would be if an engaged, well-educated, and enraged public to finally go after them and make them pay for what they did with torches and pitchforks. Hey, this is closer to a dystopian movie plot than third world reality. For now, people are still wrapped up by the media-fed drama regarding the disease and its symptoms, and the global economic concerns haven't hit their doorsteps yet. However, that soon will change by the time they realize this episode is far from an ending. Even if the number of infected victims considerably drops during the next couple of months, governments may still use lockdowns as an excuse. And if they're proven to work, then they will just keep happening. As it's affirmed on Zero Hedge's website, governments may use the wave model conditioning to allow the public some brief moments of lockdown lift, predicted to last probably less than a month, and be followed by a resurgence of infections, leading to hard lockdowns one more time. They're not expected to disappear any sooner, since we have a 7 billion worldwide population, and there is still a lot to happen before this fades away. Now, these events are inevitably going to escort us into a never-ending cycle of suppressed business activities, businesses' downfalls, unemployment, and chain supply breaks. Governments and central banks had designed this scenario where the only way out is through monetary policies and universal basic income, UBI. Now, considering the eventual implementation of the Defense Production Act, the US dollar will drop at levels never seen before, and the Fed will have to finance corporations directly through stock purchasing, or if the governments do so, and the Fed will have to finance the governments with groundbreaking levels of debt. The US Treasuries are literally being thrown away by foreign central banks that were forced by the liquidity crisis to sell their assets in order to accumulate dollars. And with the Fed moving towards an infinite-like stimulus model, US Treasuries don't seem to be a viable means to make a profit from or for wealth protection. Consequently, the central bank may become the only buyer left to fund the US government. The elites are about to become the main provider for everyone that isn't self-sufficient. Small businesses are closing, large corporations are in huge debts, people are losing their incomes and their jobs, and this will guide us to a massive level of dollar creation to help keep the system running. And we're talking here about tens of trillions of dollars. There isn't even a remote chance that the dollar as we know it will survive this scenario. It'll lose its value continuously, create inflation, and lastly lose its global reserve status. But as scary as that sounds, the elites have known about this already. In fact, they benefit from it. First things first. A major downfall of small businesses is expected to happen over the course of the next semester. Its assets are going to be absorbed into the banks and large corporations. Even the government bailouts won't be enough to ensure their survival, probably only helping at a first moment with payroll for employees to provide some balancing. But just as it happened during the Great Depression, trade and production will be captured and devoured by the top 1% of the 1%. Then, to test their modern monetary theory model, the establishment will lead the public to accept the idea of a monthly universal basic income, which surely won't be enough to maintain the third world standard of living, but it will sound like a better alternative than starvation in an aggravated economic circumstance. Ultimately, with the contagiousness of the disease alongside the dollar downfall, a perfect scenario will be set to stimulate the implementation of a long-desired dream of the elites, a cashless society. By the end of this year, the dollar's status as a global reserve is gonna raise questions, while the idea of a digital currency will be put out for public discussion. Eventually, the public's choice will come down to bowing down to a new digital currency or to the beginning of the creation of local, self-sufficient economic systems. So, it seems that the future doesn't get any easier for any of us. Now, you could be wondering at this point, are we ready for a digital currency? Does this mean it'll become world money? Will the dollar become like a local currency? And the answer to all these questions is yes. The International Monetary Fund has been using special drawing right, or SDR, as a form of world money since 1969, and it's considered as a potential source of unlimited global liquidity. SDR includes a range of global currencies, including, of course, the US dollar and the Chinese renminbi. In May 2019, IMF Director Christine Lagarde had given a hint about the development of a digital currency, similar to the Bitcoin, for the organization's SDR mechanism to replace the existence of the present reserve currencies. Several publications had named it IFM coin, and they say it could potentially reinvigorate the SDR standing in the international finance system since the drop of its importance after the collapse of Bretton Woods Agreement and the adoption of a floating exchange rate mechanism. This is due to the fact that a digital currency would replace the dollar as a reserve currency in international trade transactions. It's said that this currency will become standard for international transactions such as the exportation and importation of goods and services, and it will assume its role as a protagonist on the financial markets, causing devaluation of many other local currencies. Especially after the dollar gets overthrown, it's expected that the SDR takes over the position of a global reserve currency at some point in the future. A World Economic Forum's article entitled "A Digital Currency Should Be Adopted as the World's Leading Reserved Currency" has revealed that some, including former People's Bank of China Governor Xu Xiaochuan and former Colombian Finance Minister Jose Antonio Ocampo, have since advocated following through on that plan. The article also explains that an IFM coin debt market would even be good for all reserve currencies, with exception of the US dollar, as they say their weight in determining the asset's value exceeds their current shares in foreign exchange markets. In a larger picture, the ESDR or IFM coin's rise could add pressure on the US to rein in its spending. Digital money has been the establishment's pet project for a while. Now they've finally found a perfect gap to push their agenda in, because it's very likely this currency will never actually be printed, but transformed into a worldwide virtual coin. A Wall Street Journal article affirmed that IMF coin would also help to prevent currency market volatility that occurs because of trade imbalances. They argue that a digital currency can accelerate the economic growth. This is due to its ability to prevent countries from accumulating physical currency to maintain their reserves. Usually, this accumulation leads to tightenings in the global economy. Alternatively, the IMF could digitally control the number of IMF coins in circulation based on economic conditions. Usually, monetary resets are planned to happen in the space of 30 to 40 years. However, we're going on our 50th year, which means we're falling behind and we won't be able to keep up. But hey, don't be mistaken. This currency will only be handled by leaders and big figures, which will leave us with worthless dollars if we don't start to invest right now in our own monetary protection, such as the purchase of gold if we can find it. Central banks around the world are also adding gold reserves at their strongest pace ever recorded. In 2018, it hit the highest demand for gold from central banks since 1971, and the amount of 4 trimesters in gold purchasing is the strong ever on record. Keep in mind that gold is a stable source of value, with thousands of years of trust among humans. Even JP Morgan is recommending its investors to lower their dollar reserves. They think that the dominance of the dollar as the world's favorite global reserve currency reached a countdown. It is smart to vary the reserves and prepare for what's coming next. It's only a matter of time before the devaluation of the dollar hits up to 80%, and this can be a dead end for our lifelong savings.